Welcome, everybody, to Wall Street Reporter's Company Spotlight. We are back with Jumia Technologies. JMIA is the symbol on the New York Stock Exchange, and we're speaking with Francis Dufay. He is the CEO of the company. Francis, welcome to the program.
Thank you very much. Thanks for having me today.
Francis, so, Jumia is actually a company that, we first interviewed, we first featured on Wall Street Reporter way back in 2019, right after the IPO. And, the stock has been on a roller coaster. I think it was around $20 when we first did the interview. It went to $250, then it went to $70. We're at $350 now. So it's actually very exciting, I believe, for investors because, investors like these kind of roller coaster rides. It's very similar to what happened with Amazon in the early days. I don't know if anybody remembers, but Amazon had a very similar roller coaster. And investors have actually referred to Jumia as kind of the Amazon of Africa.
So roller coaster is a nice way to put it. We've had an eventful recent history. We've been through a lot of things, positive and more challenging. But the fundamentals remain strong. Jumia remains the leader of e-commerce across Africa. We're operating in 11 countries. We have scale, we have experience, we have technology. Our core business is the e-commerce marketplace, basically, and supported by a very strong platform in payment technology for Jumia Pay, and I think the best platform across the continent for logistics with Jumia Logistics Services. That is the backbone that enables us to do e-commerce across the continent while there is little local ecosystem to do it. We, on top of that, have a number of other services in advertising and in food delivery, for example. So we are fairly diversified across a large number of countries, which makes us more resilient to crises that can happen here and there in Africa. So every year you hear about one country that has elections, some unrest and everything, which makes the story of the continent. But being diversified across countries makes us less dependent on that kind, less sensitive to that kind of shock.
Right. No, this is kind of one of the challenges because you're right now in you said you're in 11 countries in Africa.
Yeah.
What percentage? Okay, so people think of Africa, it's a big continent, but what percentage of the population is Jumia kind of touching? The total population is 1 billion.
So I could not tell you exactly what percentage of the population we're reaching. What matters to us is that we're in the right markets where it's possible to operate at scale. Okay. There are many markets that are certainly big. For example, there's DRC or Ethiopia that are huge markets, huge potential markets, but we would never be able to operate as a listed company in an efficient way in those markets. So there's no question of us going there in the near term. On the other hand, we believe that we are in all the big markets that make sense. So Nigeria, Egypt, South Africa, Ghana, Kenya, Ivory Coast, Senegal, Morocco, Tunisia, and so on. So wherever it's possible to operate at scale with the right level of GDP, population, and the right ecosystem for e-commerce, we're here.
Okay. No, look, the African economies have really been booming. Especially in Nigeria, I know they've had a bit of a roller coaster, but there is tremendous growth there right now. Just a tremendous economic growth. You're in 11 countries. Which is the biggest market? Is it Nigeria or Egypt? Which is like your kind of biggest market right now?
So we're not disclosing data at market level for Jumia figures, but definitely Nigeria is the biggest economy where we operate, and we have pretty good penetration in that market. Egypt is also an extremely strong economy in the region, which had some challenging times in the past year. And then we're also in the other big ones like Morocco, Kenya, that are big economies across the continent, and South Africa, obviously.
Okay. So you have, so you got e-commerce, you have logistics, you have a payment platform. So you're kind of like an Amazon, a PayPal, maybe not like an Alibaba, rolled into one in an emerging market.
So the way we see it is that we absolutely needed to build some additional platforms so we could operate e-commerce at scale and in a way that makes sense in terms of service for customers. So if we did, we had to build quite a big logistics platform across the continent so we could actually deliver stuff. We didn't do it because we love logistics, we did it because we had to. And it turns out now to be a great asset, a wonderful barrier to entry, and actually something that we can monetize to other parties.
Okay, so this is very interesting. I want to ask, what's the competitive landscape like in the markets that you're in?
So today we have very little competition that is online. So the most prominent competition we have is in Egypt, where we're fighting Amazon because they took over Souk a couple of years ago as part of a broader deal in the Middle East, and Egypt was part of the deal. We're fighting Noon as well in Egypt, which is a Middle Eastern company funded by the Saudis. And we're fighting a big player in South Africa named Takealot. Can you hear me?
Oh, yeah, I can. And so in other markets, basically, let's say Nigeria. Is that pretty much? Do you have that all to yourself, or like what's your competitive position there?
So in Nigeria, we have, limited online competition. There are a number of local players, but Jumia is by far number one in the market. There's no discussion around that. What matters in countries like Nigeria and in many Eastern and Western African countries is that we're actually fighting to increase the share of e-commerce. We're fighting offline trade, we're fighting informal trade. These are economies where the share of modern trade, actually like real supermarkets and mall, is really low. We're talking like 5 to 10% maximum total trade. Okay. So it's all about building a bigger share for e-commerce. It's a big cake, and we need to broaden the share of e-commerce in that market. So we're not really fighting pure player competitors. We're really fighting to make e-commerce big, just e-commerce, and we are e-commerce basically in those countries.
Okay, that's interesting. Okay, so the positioning is essentially, they see you as that's the only name they know, Jumia. Let's say Nigeria or some of these other markets. That's the Amazon there, or the Alibaba, if you will. Okay,
we are by far the biggest name in e-commerce. Yes.
Okay, what are you doing right now, like in terms of revenues, like an update, like what is like the run rate, like what's the annual, what's the revenues like?
So, well, all the figures are public, as you know. I will share the latest trends. So we've been, we closed last year around slightly above 200 million in revenues, above 800 million in GMV. But what matters right now is that we're in the middle of major turnaround, actually. So a couple of months ago, 6 months ago, actually, we changed the leadership, we changed a large part of the management. We completely reviewed the strategy, and I've been pushing a fresh new plan over the past 6 months to completely pivot the way we're doing business. We come from a world where for tech companies in emerging markets, money was plentiful, to a world now where, well, there's a
we're in the real world,
supply
right?
of fresh cash, as you know. And in that world, we chose to pivot completely the way we're dealing with top line and growth.
Okay. If you're enjoying this video, make sure to click that like and subscribe button to subscribe to our YouTube channel. Also get the notifications to get updates on all our latest videos. And of course, make sure you get a copy of my #1 bestseller book, 10 Bagger Blueprint, #1 bestseller on Amazon. Gives you my proven framework, the proven system for finding stocks that can go up 10x to 100x. Now look, I've created over $1 trillion in wealth for investors over the course of the last 25 years. And this book gives you that proven framework, a proven 10-step system for finding those stocks which can go 10x to 100x. It tells you the signals to look for, when to get in, when to get out. It goes into fundamentals, technicals, charts, all the stuff that you need. So again, 10 Bagger Blueprint on Amazon, and here's to your 100x. On your earnings call a few weeks ago, you mentioned that the big focus this year is going to be, this drive towards profitability, and you're kind of taking a two-pronged approach, which is one is, cost reductions, which you're having some success with, and maybe you can share some of the metrics there, but also really starting to do some aggressive growth, to scale growth. So can you give our audience an idea of, what you're doing in terms of the cost reductions, what you're doing with the growth strategy, and when can we see this break even and profitability for Jumia?
Sure. So for a little bit of context, we come from a world where we've been growing at pretty high cost from the old recipes of spending a lot in marketing and a lot in customer discounts. It has proven unsustainable financially, and even in terms of customers acquisition, it was not a lasting impact. I've now pivoted the company to a whole new plan, which starts with lots of savings, and we're going to prove to our investors that we can run e-commerce in Africa with much, much lower costs than we did in the past. And this is already starting to happen. We disclosed in Q1 that we had reduced the EBITDA loss by more than 50% year over year.
50% reduction.
Yeah, 51 to be fully accurate.
Okay. So that's significant.
So that's the first step. That's the result of 6 months of work, and it does not yet capture the full impact of what we've done at this stage. And we believe that we can safely go much further than that without breaking the engine, most importantly. It's just, to be fair, we just had a lot of fat. And we had a lot of efficiency to capture in many dimensions, in marketing, in logistics, in G&A, across the whole P&L. So we're going very fast on that dimension. It comes with simplification as well. We're removing some business lines that were irrelevant or that were just big loss makers, or where we cannot sustain the complexity. But it's very important that we show that we can run e-commerce in Africa with much lower cost and much more rational and a much leaner way. This is happening. On the other hand, we need to grow. We badly need to grow. It's extremely important. We're an e-commerce company in emerging markets, so growth is obviously part of the story. And we need scale for break-even, inevitably. We're still very small. If you look at the numbers in active customers and GMV, there's still quite some potential ahead of us. And that growth can happen while reducing G&A, reducing marketing, and being much more efficient in every possible dimension. We have proven that at the scale of some of the markets we already operate, especially in Western Africa. We don't have to burn a lot of money so we can grow. It's not correlated, actually. That growth now will happen from basics, very basic basics. First one being supply, and second one being expanded distribution towards more cities in the countries where we operate. These two levels are very specific to Africa. To our audience in Europe or in the US, this is not something very obvious, and this is not something very impressive. But supply in our markets is the big limiting factor. There is demand out there. It's just extremely poorly supplied, especially if you live outside of the big capital cities. It's hard to get a fridge for yourself. It's hard to get appliances. It's hard to get a phone. It's hard to get a pair of shoes at the right price with a brand you can trust at any given time of the year. Really, we live in markets that are poorly supplied, poorly served, and our job is to bridge that gap.
Okay. I saw this, you touched on this before, and which I was kind of surprised by this. I think I saw this in one of your, maybe you mentioned on the earnings call, but again, I think the quote was that in Africa, the constraint is not on demand, but rather supply, getting quality products at good prices. So
exactly.
Yeah, something, in the US, everybody, the problem is everybody wants, it's the demand. Whereas there, Supply.
In the US, supply is a given, right? You go to Walmart, there's everything, and there's a Walmart everywhere. Or Amazon delivers everywhere, and there's everything on Amazon.
So what are you doing? What is Jumia? So what is Jumia doing? Are you going after into these secondary cities? Is that the focus? Where they don't have?
So we need to deliver much better assortment across our key categories. So we've selected 6 key categories where we are strong and where we know we have good economics and we can deliver profitable business: fashion, beauty, home, electronics, TV, appliance. And we onboard all the supply, all the right vendors, all the right brands, all the international vendors from China or from Europe or elsewhere to those categories in each of our countries. So we can bring that to our customers at most competitive prices possible. Our customer base is very much cash constrained, right? We're not talking to very rich customers, obviously. So we need to be extremely competitive on price while bringing quality. And with that assortment, we go, of course, to the big cities, but also to the smaller cities that are really poorly served or not served at all by modern trade at the moment across most of the markets. Across most of the markets where we operate.
How big is the population in what we call these secondary cities in the aggregate? Like how many? What's the size of the population that you could be addressing?
Well, it's subjective, but we're aiming for any city that's above 50 to 80,000 people, depending on countries.
Okay, you're not going to rural. Are you going to rural areas or no?
Well, a city of 50,000 people in many countries is considered as rural. So it's very subjective.
Right.
But a city of 50,000 is usually a city that's surrounded by farms and where there's a lot of agricultural employment. It's usually far away in the countryside. It's like 5 or 10 hours drive from the big city. So we can fairly call it rural in terms of infrastructure, equipment, and purchasing power. We can call it rural. But most importantly for us, it's a pool of population that still enables us to sustain some logistics footprint in a profitable way.
Okay. Now you mentioned that one of your big competitive advantages is the logistics side. So can you tell our audience a little bit about what you're doing with logistics and how big of a moat that is for Jumia? In other words, can Amazon? Let's say I'm surprised. Like Amazon is really not in your markets, right? Like, do you have a big moat because of these logistics? And what's the value? What is the value that I think the audience needs to understand? Like, what the company's trading at a $300 million valuation right now, right? And we've seen big e-commerce plays for a company like Amazon to enter a new market, which is difficult to penetrate. They'll be willing to spend a couple $1 billion or more, or billions, right? So, I mean, one of the questions probably people are thinking, okay, is Amazon a potential buyer of Jumia at, I don't know, let's call it $15 a share? I mean, I'm just throwing something out there, But
I'm not able to comment on that, but definitely building. I mean, let me step back a bit. In most countries where we operate, the logistics ecosystem is nowhere close to what you may know in the US or in Europe, right? If you want to set up an e-commerce company, you will have a very hard time finding partners who have technology, quality of service, and most importantly, the right price to deliver your products in a cost-efficient way, right? Our customers are not extremely rich, so we need to be extremely cost-efficient at every step of the chain. So that ecosystem barely exists or doesn't exist at all, depending on the markets. We have different levels of maturity. So in most markets where we operate, we've been spending the past 10 years building ourselves that ecosystem. So we've been building 3PLs, we've been feeding them with orders, we've been providing them with our own Jumia technology that is controlling everything that they do, and we've been helping them to grow into regular businesses. But I mean, while we chose not to invest in capex like in trucks or in big warehousing platforms and so on, we've made the investment specifically in technology. So we provide all the systems for the whole chain to third-party partners who are on their end very efficient, probably more efficient than we would be to do trucks management, riders management, pickup stations management, and so on. So it's a subtle balance that that is extremely relevant given the local constraints in those countries. And that's working with very little capex, and that's getting extremely efficient now in OpEx.
Okay. In terms of how big of a barrier is it in terms of like what would it cost somebody if somebody wanted to enter those markets? How much would it cost them to replicate this, and how long would it take them to do it?
So the cost is in time. It would cost time, mistakes. Mistakes are expensive, bad experience for a while, or overpaying partners to get same level of quality. It would be quite a nightmare for someone to try to replicate our infrastructure, our logistics network in a short amount of time. I mean,
Yeah.
we've spent 12 years doing that, and we're still improving.
Okay.
And
So
very, very different logics from what I mean, from what Amazon may know in Western markets.
okay. It's interesting because I mean I think what people don't appreciate all the times is the the kind of the value of time, right? This is why Elon Musk was willing to pay $50 billion for Twitter. I mean, he could replicate that himself, right? He could probably build something better, but it would take him 5 years. He doesn't want to wait 5 years, right? So the value, which I mean, it took you guys like 12 years to do this, build this out. If somebody wanted to enter this market, it would take them years to do it. It would basically it could be billions of dollars. I'm assuming it would be billions of dollars to replicate.
I don't have a price tag for that, but it would be extremely costly to come and replicate what we've built. Absolutely.
Okay. Yeah. So yes, I mean, in other words, like that's kind of something I'm looking at. Okay, so looking at the stock, that's one of the real value drivers is kind of this value of this logistics system. So the question I have is, okay, so where do you see you're reducing costs now? You've reduced costs 50%, 51%. You were working towards break even. How big, how far, how fast can you scale? Where do you see the biggest opportunities really to drive growth right now? Because you got to do both. You got to cut costs. You're doing that, but how do you really step on the gas?
So we're growing from basics, really. That's not very sexy, that's not spectacular, but the biggest opportunity for us to grow in a sustainable way. We're not going to grow like e-commerce companies would do in the past. We can't afford it, and it's not the right thing to do anymore. But we're growing from basics in supply, basics in distribution, which is what matters in our markets. Consumers don't want fancy advertising on TikTok and YouTube. They want the product, they want to trust the service, they want to see something very tangible. That's what matters. That's where we are. That's where our markets and that's where our consumers are. And we still have quite a long way. I mean, and lots of, pool of an ocean of opportunities to meet that demand. Demand is here. I mean, we know from many of our markets that we can get very interesting level of penetration. And we know that many markets are far away from that. So from our own internal benchmarks, we can grow this company very significantly. I cannot put a number on it. But we have huge opportunity in our hands that actually fully depends on our own quality of execution. The overall context, the macroeconomic background is, bad to say the least. I don't know how much worse it could get than that for emerging markets at the moment. But even in that context, most of the levers are in our hands. We'd be very happy if the Fed decides to cut the rates at some point, but we're working. We're not worried. We don't use it as a hypothesis of work. We believe that everything is in our hands right now to tap all that unmet demand in our 11 markets. So I cannot tell you whether we should be twice, 5 times, or 20 times bigger. That we should be way, way, way bigger than we are today, just by executing on some basics in service and supply.
Okay, so at what point do you anticipate reaching break even and start turning a profit?
Yeah, so we have not given formal guidance on that, so I need to be very careful with what I tell you. But obviously, we're working towards that direction. it has to happen, of course, and not in 20 years.
And so you're doing roughly, it's 200 million run rate. Again, I'm going back to the same question. Can you get to a bit, like how long can you get to, let's say, $1 billion in revenues? Like what would need to happen? What do you need to do to get there?
So, of course, we can just look at the market where we're talking a pool of consumers of hundreds of millions, totally underpenetrated by modern trade and retail. So, of course, e-commerce can reach that on the continent, and e-commerce should be Jumia. I mean, right now, e-commerce is Jumia for most countries. What we need for that, I mean, once again, it's a bit underwhelming, but it's very, very strict and very good execution on our hands, because we have most of the levers already identified from 12 years of experience across the continent in 11 markets. We know what to do for supply. I mean, we have tons of actions to execute from overseas vendors, Chinese suppliers, from local vendors in marketplace, in retail, introducing new brands, foreign brands, local brands. And there are a billion things that we are starting to do. We're just prioritizing the projects. We know how to expand outside of big cities and cover the whole market, while currently in most markets, we're mostly addressing the urban elite. We know how to expand like 100 times across each country. So it's all about us executing extremely fast and in a very cash-conscious way.
Okay, Francis, now you're relatively new in the company as the CEO. I think you came on board 6 months ago. So can you tell our audience a little bit about your background?
Yeah, so long time ago, I used to be a consultant at McKinsey, based out of Europe, but working most of the time on the African continent. And previous to that, I had been through business school in France, and I went for MBA in the US in Chicago at Kellogg Business School. And then right after consulting, so about 10 years ago, I joined Jumia in Ivory Coast. And I spent the last 9 years at Jumia managing Ivory Coast. With strong focus on logistics at the beginning, so I have some particular taste for that dimension of the business.
So you're an operations guy, basically. Logistics is very.
I've done my 4 years of strategy consulting, but I'm very much of an operations guy, which I think is what the company needs at this moment. I mean, we're in a tough time, we're in turnaround, it's crisis time for everyone. We all need to be in operations. We don't really need high flyers at the moment. And I think it's very good for the whole company, and that's what the whole management is doing at the moment. Over the past 12, prior to becoming CEO of the company, I was already managing 9 countries out of the 11 countries of the group. So I've had a fairly good idea of the challenges that everyone is meeting. And I've been able to start some of the transformation before being appointed.
Okay, Francis, what's your vision for Jumia over the next, let's call it short, 2 to 3 years? What, if everything goes right, let's say if your plan goes, more or less right. I mean, things are always unpredictable, but let's say you get things mostly right. What's the thing going to look like? We're talking about, is it a $1 billion business, or what's going to be the?
Yeah, so what we will have, if we execute well, once again, and not betting on any external improvement, we'll have a financially healthy company. So I'm not giving firm guidance as you hear, but financially healthy is extremely important for us in the current environment. That proves again a strong ability to grow without destroying the economics, which is extremely fair given the huge potential, the huge pool of demand that's ahead of us. I mean, Africa has amazing potential. There is a lot of supply that wants to go to Africa. There's a lot of unmet demand in Africa, and we're right in the middle between supply and demand. That's our job to make it work. And we can do that in a very cost-effective way, and making sure that Jumia grows like multiple times. So we will benefit from our first mover advantage, finally, to be a dominant player with strong economics, strong service to customers, great barriers to entry that we've been building for 12 years or more. And that should give us a very healthy position, financially speaking.
Okay. Looking at the short term, like sort of midterm, I would say, what are some of the key milestones that investors could look forward to over the next 12 months? Like, in terms of news flow, in terms of like, further cost reductions, growth, like what are some of the key milestones that you think are out there?
I mean, two very simple ones. I mean, without going too much into details. One is our ability to grow again. Very important. So, I mean, we're an e-commerce company in emerging markets, so we need to show that we can meet all that demand. So that's growing. So we need to show that we can grow again, and we'll be assessed against that, and that's perfectly fair. And that's where I'm spending most of my time today. And two, we need to do that while keeping on improving the economics. So we put ourselves in a much more comfortable position, and we show our investors that we're not just carelessly burning the money, and we're very careful with that. So there will be steps and steps in improvement of the economics, and especially cash utilization and EBITDA, that should also coincide with improvement in the top line trend. And that's the story that we want to deliver for the coming 12 months.
Okay. In terms of your cash position, you have, I think you have what, 100, 200, or how much cash on hand in terms of you have enough to carry?
Roughly. So we have roughly $200 million at hand right now in cash and cash equivalents. We lost in EBITDA. I mean, the EBITDA loss is very close to the cash burn actually in our business. So we lost $27 million of EBITDA in Q1. So anyone can do the math, which is an improvement of 50% versus previous year. We're not focused on raising cash at this stage. That's really not.
Okay, so there's no need to raise capital.
That's not something we're working on. Definitely not. I deeply believe that cash problems are good for the health of companies, and it totally applies in our case. I mean, really, somehow we had to go through that.
Yeah.
We're really focused on transforming the company.
Okay. My last question to you, Francis, is so in your opinion, what are the key value drivers? What are the top 3 reasons why investors should consider Jumia stock today?
I think so. I see 2 big ones. One is current stock price definitely embeds a lot of downsides and none of the positive news we're working on, right? I mean, current valuation of the company, if you think of it, is a bit ridiculous, right? We have 200 million of cash and cash equivalent, and we're valued around 300 million. So it gives you a poor idea of the value of our operations. I mean, it's the result of some legacy, and we have to deal with that, right? I mean, trust has at some point certainly been broken with some of the market. So a lot of bad news and a lot of bad legacy is in the price.
It's baked in, basically, right now.
Yeah, definitely. And all the benefits of the turnaround that we are running, that is well underway, are not in the price, not yet. I mean, the fact that we've just extended our cash lifeline by a factor of 2 in the last 3 months has not really been. I'm not sure it's been captured. The fact that we have made such massive savings on G&A, for example, we've removed one third of salaries in the company. I mean, there's a lot of progress that's already been announced that will slowly impact the valuation, I assume, and there's a lot of progress that we are making that we cannot announce now, but that will show in a very tangible way in the coming months. So the good news are not yet in the price. The bad news from the past couple of years are definitely in the price. So that's short-term reason. More long-term, I mean, beyond the current turnaround and difficult times that we're going through, and I think it's healthy in a way. Beyond that, I mean, Jumia is e-commerce in Africa. We are e-commerce in Africa today. Africa is a rising market. I mean, it's going to be the biggest retail market in the world at some point. Huge population, young population, willing to work, willing to consume. Africa is the last frontier for brands, for all the brands in the world. We are right in the middle between that huge demand growing and all that supply that we'll be looking at Africa. We are at the right place at the right time, maybe a bit ahead of time if you think of the past 12 years, but that first mover advantage and all the experience that we have acquired across Africa in the past 12 years at a cost, but invaluable and priceless experience, all that will pay off it will pay off because we're doing the right things right now to remain in business and to be a very strong company for Africa.
Okay, Francis, I want to thank you for the interview, and we look forward to catching up with you sometime in the future.
My pleasure. Thanks for having me today.
If you're enjoying this video, make sure to click that like and subscribe button to subscribe to our YouTube channel. Also get the notifications to get updates on all our latest videos. And of course, make sure you get a copy of my #1 bestseller book, 10-Bagger Blueprint, #1 bestseller on Amazon. Gives you my proven framework, the proven system for finding stocks that can go up 10x to 100x. Now look, I've created over $1 trillion in wealth for investors over the course of the last 25 years. And this book gives you that proven framework, a proven 10-step system for finding those stocks which can go up 10x to 100x. It tells you the signals to look for, when to get in, when to get out. It goes into fundamentals, technicals, charts, all the stuff that you need. So again, 10-Bagger Blueprint on Amazon, and here's to your 100x.